So first thing we do is we find out, is this currently rented? Is it going to be a long-term rental? Is it going to be a corporate furnished rental, a midterm rental? Is it going to be a short-term vacation type rental property, a daily property? And then we ask for the numbers. What's the purchase price? What's the gross anticipated annual rents for a short term?
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Beau.
Hello and welcome to another episode of the Investor Financing Podcast. And on today's show, we're going to discuss options for your STRs, for your short-term rentals and vacation properties that you're looking to finance, the pros and cons of non-bank rental portfolio loans, what they are, what they're about, and why you might want to lean towards a non-bank versus a bank. And let's get started. So first benefit is that they're not looking at your personal tax returns. So that means we're not looking at debt to income. So we don't need tax returns. That's a huge benefit for real estate investors because oftentimes the adjusted gross income, even adding back in depreciation, makes it very difficult to qualify for Fannie or conventional financing on these non-owner occupied properties. Second advantage is that these rental loans do not show up on your personal credit report. Third advantage is these loans can be made to a business entity from the start, so you don't have to own them in your personal name, although you do sign as a guarantor. But that's a huge benefit. So you could have potentially a series LLC, check with your local attorneys and your CPAs to figure out what entity structure might be the best for you for ownership purposes and taxation. So let's kind of recap. It doesn't go in your personal name or your personal credit report. No tax returns required. It's based solely on the income or projected income of the property. Now, not all portfolio loans will underwrite off projected short-term rental or vacation rental income. Many of them will do a 12-month look back for refinances, which if you can document 12 months of history and from like a VRBO or an Airbnb, they'll use that income for debt service coverage requirements. Basically, debt service coverage means the property is making enough money that it can handle the debt of the property by 125%. It's as simple as that. So that's what we're really looking for is good credit, a good cash flowing property. And that's all you really need. And pricing is determined on loan to value and credit score. You do need to show about 6 months of PITI reserves, meaning principal, interest, taxes, and insurance. So whatever your full payment is with taxes and insurance, multiply that by 6. You should have that in an account showing post-close liquidity that you could debt service this property for the first few months. That's what they're looking for amongst good credit, things like that.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Are you in the market for a commercial loan? Did you find the perfect opportunity but need funding? Have a special situation? At Find the Bank, you will get quotes with competitive rates and terms from multiple lenders without any hassles. Have a multifamily property, construction project, owner-user property, industrial, mixed use, hotel? At Find the Bank, you can get nearly any kind of commercial financing. The process is simple. Once you send us some information about you and your property, we send back a quote sheet. Then we quickly connect you with an advisor. You won't spend hours calling multiple banks trying to find the right person to talk to. We'll connect you fast to the right person, hassle-free. Better terms than you could get on your own. Go to findthebank.com and complete the form. An advisor will be connected with you within minutes to discuss your specific financing needs.
So the first thing we do is we find out, is this currently rented? Is it going to be a long-term rental? Is it going to be a corporate furnished rental, a midterm rental? Is it going to be a short-term vacation type rental property, a daily property? And then we ask for the numbers. What's the purchase price? What's the gross anticipated annual rents for a short term? And also we ask, what would it rent for on a long-term basis? Because sometimes I can slide you into a program if the property would debt service from a long-term standpoint, and we can get you sometimes a little bit better rate that way. So I always ask these questions so it opens up the door, because essentially what I do is I navigate with all the different funds and I figure out where the best rates and terms are. In addition, why I like some of these programs is that you can do a 5-year fix, you could do a 7-year fix, a 10, and a 30-year straight fixed loan. There's a program out there that offers a 7-year fixed IO, interest only, as well as a 5-year fixed IO. So the first few years, you don't do much principal reduction anyways. When you're making your payments, you barely pay down principal the first few years. And maybe your objective is, let's get the cash flow. So sometimes we look at doing an interest only loan on these rental properties. Sometimes some borrowers come to me and they have to close next week. These rental loans take about 30 days to close. 35 is what we recommend you write an offer at. And I know in this market it's competitive. So sometimes I get a client calls me, hey, the bank I was dealing with for this vacation rental, they changed the terms. I got to close next week. I'm able to facilitate those deals, but that's what we call a bridge loan. And a bridge loan I can do anywhere from 6, 12, 18, sometimes 24 months. The rates aren't as good. It's an interest-only loan, but sometimes you need to close quick, and we can usually close those type of deals in 7 to 10 days. I would say 10 days right now, just because everybody's backed up, including escrow, title, appraisal, all that stuff. Some of the lenders require full appraisals with rental surveys. Some of them just do a BPO. It really depends on the lender we work with. There's also a new product out, which was around in 2005 and 6 before the downturn, which is a 40-year amortized loan, and they'll actually write it so it's interest only for the first 10 years. So there's lots of options for your rental properties right now, whether it's a long-term, a short-term. What I like to do with a lot of my clients, because a lot of my clients like to do value add deals, is we go on with the fix or bridge funding. We lend as high leverage as we can, including the CapEx or the repairs. We get it fixed up, rent it out. And month 6, we have lenders that will use new appraised value at month 6, and we refinance at that point using new appraised value, trying to pull out as much equity or the cash injection that we put in back out, and then replicating this over and over and over again. So anyways, just wanted to give you an update on portfolio rental loans and why you would sometimes want to go portfolio versus going to a bank. Now, sometimes the bank's rates are superior. I will give you that. But a lot of times these banks on the short-term product will only be amortized over 20 to 25 years. So if you pay a little bit higher interest rate, your payment's about the same and you have a 30-year term. So it really washes itself out. Obviously, the less interest you pay, the better. But sometimes it does make sense to go into a 30-year portfolio loan, especially if it's hard to verify income for you, you're self-employed, you have a lot of write-offs, or you don't want to jump through the hoops of documenting everything. And that's why we use these portfolio loans that we do not require tax returns. Anyway, thanks for watching another episode of the Investor Financing Podcast. I'm your host, Beau. I appreciate you. Please like, share, and if you want to book a call with me, click on the link below and schedule a call at your convenience. Thanks so much.